This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. So yesterday, in response to a great post, again, that Luke had with 52-week highs, the microns, of course, but also Corning and Caterpillar. It's been Teradyne, oh my. Very, very, very nice continuation, swing or trend long trades for some. But my focus was, okay, when do we get a little money rotation out of these bottleneck AI trades and into hyperscalers? Obviously, Mag 7 is on the ground. So I went through and just basically wanted to share those thoughts. Definitely read that. I'm looking at a great, great quote also by Juliette de Klerk regarding why bonds could get a very strong bid, big picture this year. This pro-profit AI revolution, in other words, is structurally disinflationary and argues against the need for sustainably elevated yields. You add that in with the energy deflation theme that comes both from end of war, I've talked about, Jeffrey has talked about, and structural oil and gas substitutes for ground transportation that are happening much more outside of the US, but the rest of the world is embracing them. Anyway, you've got this disinflationary impact on wages, especially. That feeds into my theme that I have repeated since last year, recession into all-time highs, where the corporations are making bank, but wages are not rising, and they're surely not outpacing inflation. Anyway, you got Warsh, I think, is a wolf in sheep's clothing, and the 10-year, 2-year flattener I called in January before he was even nominated is priced in. So therefore, I think it's going to be very hard for him to hike, very hard for him to hike for all kinds of reasons. Maybe we get one normative hike, not accommodative for credibility purposes. But given the fact that, and I wrote 8 to 9 trillion, I was doing that from memory. After I hit send, I actually checked to see what are the T-bill amounts that the government has to roll this year. It's 10 trillion. I'm a little underweight there, sorry. Anyway, I don't think that this is going to be a hiking regime, long story short. Translation, I absolutely do see the dollar moving higher. I've got some intermarket I want to show you. And I do see some of this AI and energy deflation working its way into the system. And then we get this little commodity burst at the end of the year and into 2027 specifically. So I can absolutely see a case for 10% correction. I showed you that NASDAQ composite head and shoulders. We've got to break that 25,000 to come into 24,000. Then we would break the 24,000 and we could have some gnashing of teeth this summer. But I've already written about that, talked about that, reviewed that, chop into the drop this summer. And then, they're going to do all kinds of funny business to make it kosher into the midterms. But starting next year, I can absolutely see a headwind coming in where we get this AI really as good as it gets. Disappointment, higher dollar, higher yields, higher oil, which will make for a great little bear feast and commodity support, specifically gold, silver, etc. But right now we've got small caps that are well outperforming, and that includes biotechs, but they're so rate sensitive and they're reinflating on this lower yield regime and a migration, if you will, out of some of the hot and heavy AI winners. And we're going to go over those AI shorts that we talked about yesterday, post-Micron earnings, and then basically mega cap tech as a duration trade could be coming into view for a bounce, but I don't think it's going to happen until after the big 3 report. It's really 2 report. Samsung has earnings, Taiwan Semiconductor has earnings, and then of course SK Hynix is going to be listing in the US July 10th. So I think that is an area where we could have some little support here for mega cap tech. But right now I'm just looking jokingly at this softening of bottlenecks and a bid in hyperscalers. I'm going to have to come up with a ratio for that. And I did do some intermarket that I will share with you, but for right now, when I'm talking ratio analysis, I mean, for example, this Russell 1000 growth to Russell 1000 value ETF that I use for growth to value. We're right down into some support levels, but that does not show us the hardware over software like I did with this ratio, which is SMH to IGV, where you can see the outperformance in semis, but now they're ahead of their skis, little fake breakout, kind of fast failure action going on, or just exhaustion. Everyone's long, no one left to go long. Anyway, I don't have an ETF that I have, a ratio that I have picked for this rotation from bottlenecks to hyperscalers and hyperscalers into bottlenecks. And wouldn't you know, after Luke's comment yesterday that triggered this whole write-up and trying to time some stuff, This morning, I see Harknet coming out and he's saying, how far do hyperscalers need to fall? This is Michael Hartnett. Sorry, that's also Bank of America, but this is a Goldman chart. Forgive me, I'm mixing metaphors. You'll get the idea. How far do hyperscalers need to fall for market to start trading capex cuts? Bingo. Bingo, bingo. I just saw this morning. So, and then Goldman out also saying the first hyperscaler to signal that it can slow the pace of spending will likely see its share price rewarded. If that happens, others will take notice. That is the reflexivity that ultimately stalls the capex cycle. So we got two themes here. Anyway, hyperscalers versus semiconductors. This is a ratio and it's really very extended on the downside. So yes, I'm also kind of looking for the same thing that I just wrote about yesterday that Harknet and Goldman are talking about this morning as it relates to finding a bounce worthy play in hyperscalers that are so oversold.